The key performance parameters, if you look at it, our earning per share is one of the highest in the banking industry. It is at 5,216. Even on a reduced profit, our earning per share is 5,216 rupees in the December 15. The book value is very healthy at 50,167, basically because we haven't split the shares and we have to do that. ROA is at 0.67. It is compares well with the banking industry, and the ROE at 10.82. Only few public sector banks have an ROE of in the double digit, about 10%. And because of the impressive net interest income which I have shown in the earlier slide, the net interest margin is healthy at 3.17. If you compare, we were 3.08 in June 2015, 3.05 in September 15, and we have improved it by 12 basis points in the sequential quarter in the current quarter. As compared to the September quarter, we have improved our net interest margin by 12 basis points. And this will tell why our interest expenditure has come down. It was 31,965 crores was our wholesale deposits in December 14 on a total deposit of 1,21,495 crores, which is roughly around 27% of the total deposit is from wholesale. That has been reduced now to 24,886 crores on 1,30,310. Even though the deposits have gone up by from 121,495 to 1,30,310, the wholesale deposit has come down from 32,000 crores to 25,000 crores. About 7,000 crores we have reduced, even though we have grown the deposits by 9,000 crores. And the increase has come from the retail. That is why you can look at it, 89,530 crore was my retail deposit as on 31/12/2014, which has improved by 16,000 crores to 1,05,424 crores as on 31/12/2015. Another salient feature of this slide is that you can see that the CASA out of our retail deposit is as of now is more than 80%, of which 32.71% or roughly 33% is coming from the CASA, current account and savings account. All these things have helped us to maintain the interest expenditure more or less at the same level of last year. This is the sectoral distribution of our advances, and you can see that constantly and consistently we are migrating our advances, we are diversifying the advances into small units, and that is reflected by the C&I, which was at 47% last year of the total advances. Our per segment advances is 24%, and Agri was 14.5, and MSE was 12.33, and C&I was 47. It has been further reduced. The C&I is the large advances. The commercial and institutional advances, we call it earlier. These are the large corporate advances. Now it has come down, another 2.5% we have reduced. It is 44.4, and that has been taken over by personal segment, has grown nearly about 2.6%. From 23.96 we have moved to 25.66, and Agri is at the same level, and MSME 90 basis point or roughly 1% we have gone up. This has helped us in retaining the interest income, as well as our risk is now diversified. Instead of a large advance where the concentration is risk is more, we have been able to spread the risk by improving our portfolio on the non-C&I. This is on the personal segment, which is at 26%, and this 26% is consisting of mainly the home loans. It is about 57% of my portfolio is from the home loans, and auto loan is about 10%, education I have 5%, and because we are the lead bank in Telangana and we are the third largest bank in Andhra Pradesh, we have a lot of salary savings accounts both from the public sector undertakings, government as well as the private sector. That is why you can see that our personal advances are healthy at 28%. That helps us to help the society at large and also earn a decent margin. The capital adequacy is at 11.15. You can look at it that December 14 it was at 10.85 and it has moved to 11.15 in December 15. There is a clear 30 bips increase, and the increase has come it is 8.73, 8 basis only has gone up in our tier 1, but in tier 2 it has moved to 2.12 to 2.34 because we have raised about 500 crores in the last quarter to shore up our tier 2 bonds, and that has helped us to maintain the CAR at 11.15. And if the retained profit is included, this 11.15 is without factoring in the 812 crores profit we have made in the 9 months so far. If that 812 crore is also added to the total earnings, our CAR will be at 11.83. Asset quality. The asset quality, you can see that we were 5,824 in March 14 and we have successfully brought it down to 4,985 crores in March 15, that is about 1,000 crores. But it has gone up mainly on account of the asset quality review conducted by RBI and as on account of the yearly recognition of the NPAs. And the percentage is at 5.28% NPA. These are some of the major industries where the NPA has happened. As I told you, the major impact is in iron and steel. In the Q3 FY16, if you look at it, 712 and 58, that is 760 crores. They have mainly on account of the AQR. Movement of impaired assets. You can see that we are at the same level even though the NPA percentage has gone up, but it is mostly come out of the restructured assets and the gross NPA plus restructured advances. This is given in 7 in the slide. You can see that we were at 10.58 in December 14. In March 15, we were at 11.19. The combination of gross NPA plus restructured advances, it has come down to 10.73. This means that our other accounts remain stable and we are able to maintain the standard status in respect of the other advances. This has happened within the impaired assets only. And this is a slide on the financial inclusion. And if you look at it, we have PMJDY number of accounts, 28 lakh accounts we have opened, and RCTs we have 12 in number, and we have got lot of awards on the RCTs we are conducting in Karimnagar, in Nizamabad, in all other places. We have trained 65,263 people in that, and all unbanked villages we have covered, 3,941 villages we have covered. And our main strength is that our bank, which is having about 1871 branches, it is well spread across rural, semi-urban, urban and metro. That is why any shock in metro, it is absorbed by the rural. Any shock in rural, it is absorbed in semi-urban and vice versa. And you can see that rural branches, we have about 585 branches as on date. The next slide is the financial inclusion. The deposit we have so far is 459 crores we have in the financial inclusion deposit. That is the PMJDY deposits totally. The average balance is 725 rupees. And zero balance account, this is a reflection of how many accounts are operative, and 39% only is that is 60% of the PMJDY accounts are operative accounts, and this 60% of the accounts contribute roughly around 240 crores deposits. And that's it. Thank you.